Hey, it's Richie here. Thanks for coming back to the channel. Now in this video I want to talk about the best ISA to open in 2021, especially if you're a beginner. I remember when I first heard about ISAs a couple of years ago, I heard that it was maybe like 1.5% interest on cash ISAs, and I was like, that's ridiculous. In 2021, 1.5% is literally a dream. But stocks and shares ISA is a completely different story. As of 2021, we can currently invest up to £20,000 a year, and all the benefits we get in terms of the stock going up or dividends is completely tax-free. Now in the past 10 years, the average rate of return of the stock market has been between 9 and 10%. And obviously past results don't equal future performance, but it gives us a bit of an idea of what's actually possible. And this is probably a good time to say that I'm obviously not a financial advisor. This isn't financial advice. I'm just a girl on YouTube making videos about research I've done. Now, usually you can only open one type of ISA per year, but if you're between 18 to 40, you can open a LISA or LISA, lifetime ISA. Now, lifetime ISAs are really good because you can put in up to £4,000 a year and the government will match it up to 25%. The only catch with that is they only allow you to spend it on two different things. Either your very first home, so a deposit on your very first home, or a pension. So if you want to take it out for any other reason, they actually have a penalty on that. But if you know you're trying to buy your first house or you want to put some money towards your pension, then it's a good addition. But aside from that, you can only have one type of ISA, either a cash ISA or a stocks and shares ISA. At the moment, cash ISAs are so low, it's not even keeping up with the rate of inflation. I would only really use it if you know that you're going to need the money in the very, very short term. And it can work as a forced savings as opposed to having it in your current account and you end up YOLOing the money on something else. But if you want to invest for the long term and you want more than 0.7% on your money, then stocks and shares ISA is probably the best way to go. Now, choosing the best type of ISA can get pretty complicated, so I'm going to break down different types of investors and what I think is going to be the best platform for you. So if you're ready, let's go. Okay, just before we get into that, I just wanted to show you a net worth tracking dashboard that I've created, and if you want to find out how you can get access to this for completely free, just go to the link on the screen right now or the very first link in the description. So this dashboard is going to allow you to see exactly how much money you've got and where it is. So you can see your assets versus liabilities, how much you've got in stocks, real estate, and how much of a percentage of the portfolio it takes up. You can see it breaks down here. All different sorts of information. So if you're interested, just go to the link below and I'll show you how you can get it for free. Back to the video. The first type is called hands-free investing. So this is great if you know you want to invest but you want to put zero time or effort into it. This is usually known as robo-investing. The way this works is you sign up for one of these services and they ask you a bunch of questions just to kind of figure out what your risk tolerance is, and then they invest on your behalf. If you're brand new to investing or you don't want to put any thought into it, this might be worth it to do it just for your first year. But there's some catches with this, which I'm going to talk about. So there's a number of platforms that provide the service, but the one with the least amount of fees that I found was Nutmeg. So you can sign up and have zero platform fees in the first year and between 0.45 and 0.75 in the following years. And on top of that, they've got a fund manager charge of between 0.17 and 0.31%, depending on what kind of fund you choose. Now I know all these numbers are getting really complicated, so let me put it like this. Using a platform that does it for you will end up costing you more in fees than doing it yourself. And doing it yourself isn't that difficult, but if this is a difference between you not investing at all or investing, then I would say go for it. If you're willing to put a little bit of effort into it, then I would definitely try and do it yourself and save the fees. Also, I know these 0. whatever% fees sound really minimal and sounds like nothing, but if you're investing for the long term, 20, 30 plus years, then this can cost you in the thousands or tens of thousands when you look at it compounding against you. Now, the second way I want to talk about is the index investor. Now, Warren Buffett, who you probably know as one of the richest men in the world, he made most of his fortune by investing in companies early. So he's great at stock picking. However, when he dies, he's already said that he wants 90% of his estate to be left in an index fund for his kids or whoever is inheriting this money. If you don't know what index funds are, it's basically investing in a basket of stocks and essentially owning a small part of all of them. One of the safest and common ways of investing is investing in low-cost index funds that track the largest publicly traded companies. So in the US, that's the S&P 500. In the UK, that would be the FTSE 100. If you want the easiest and safest way to invest, I would just stick to index funds. Now there's 3 different platforms that are great for this, and I will give you the pros and cons of each, and you can kind of choose what you want to do. The first one is Vanguard. Now the pros of Vanguard are they have very low cost index funds. So by that I mean their expense ratios are usually really low. They don't take a big chunk of fees for running the fund, which means you get more profit out of it, which is great. You can buy Vanguard index funds on other platforms, but a quick look at the ones I'm going to mention, they didn't offer all of them. So going with Vanguard, it makes it a little bit easier. Now the way Vanguard's fees work are pretty simple. They take a straight 0.15% platform charge. I think the max is £375, and that's pretty much it. After that, they kind of leave you alone. The cons of this, the downsides are you can't buy any other index fund on the Vanguard platform. The other main con is you can't buy Tesla by itself if you wanted to. You can only buy index funds, and you can only buy index funds that they offer. Another con, if you think this is a con, is they don't have a mobile app, which is mildly inconvenient, but who really cares? The other 2 options are Trading 212 and Free Trade, and I'm going to talk about them in the third type of investor. This is ideal if you want to buy index funds but also want the freedom to buy individual stocks as well. For this route, there are 2 companies that stand out to me. They both have commission-free trading and also allow you to buy fractional shares, which means that if you want to buy £20 worth of Amazon and don't want to buy an entire share, you can still buy a portion of it and reap the benefits. The 2 companies I like for this are Trading 212 and Free Trade. Now Trading 212 is definitely the cheapest as it's got no commission when you buy or sell a stock. However, it does have a 0.15% foreign exchange fee when you buy something that's not in pounds. So if you put in £100 into a stock, you will pay 15 pence in foreign exchange fees to them, which isn't too bad. The downside, however, is Trading 212 has had their doors shut to new customers for at least 6 months now, with no idea when they'll be opening again. I've personally been waiting to open an ISA with them for this financial year, and I've definitely lost more money waiting on the sidelines than I would have saved with their low fees. So I'm personally going with the next option, which is Free Trade. Like Trading 212, Free Trade have got no fees for buying or selling stocks or shares, and you can buy fractional shares as well. However, they do have a £3 a month ISA fee, and their foreign exchange fee is 0.45%. So if you're buying something for £100, you'll pay 45p in fees to them. Even with the £3 a month, it actually works out a lot cheaper than a lot of the other platforms. For example, HL, Fidelity, all these platforms that people for some reason use that charge astronomical fees and you don't really get anything for it. I don't really get it. And if you've got some spare cash on the side, there's also a way to sidestep the £3 a month fee. So they've got a service called Free Trade Plus where you pay £9.99 a month and you get a whole host of benefits. One of the benefits is you get 3% interest on cash up to £4,000. So if you just park in £4,000 there, it offsets the £9.99 a month and you essentially don't really pay any fees. Also, that £4,000 is backed up by the FSCS, so it's completely safe. Now you might think that's a lot of work for saving £36 a year, but I wouldn't be Indian if I didn't tell you the free way of doing this. And if you're interested in signing up for Free Trade, click the link in the description below and we'll both get a free share valued up to £200. Now you don't actually get this if you just go and download their app and sign up, so even if you're not sure if you want to open an ISA account yet, you'll still get it. And if you're interested, I'd really appreciate it, and thanks for watching. And if you made it this far, please do me a favor and click the like button, hit subscribe, all these sort of things, because I'm a brand new channel and that really helps me out. And if you want me to make a video about anything else, just leave a comment below and I'll do my best. Thanks so much for watching and I'll see you in the next video.